The OECD's recent work on base erosion and profit shifting, BEPS, has focused strongly on economic substance as a key part of the international tax system. The OECD wants to ensure that businesses report profits and pay their taxes where they are generated. The taxable profit in a jurisdiction needs to reflect the value created in that jurisdiction, the economic substance. In principle, this is nothing new, particularly for transfer pricing. However, the OECD has introduced new guidance which is much clearer, firmer and more specific on how economic substance should be considered and analysed.
A good way to think about substance is as a process, starting with: what is the value chain? What steps does the business go through to deliver its products or services? Which of these are key value drivers? What makes the difference and what is more routine? Where are the various functions performed? What are the assets and risks of the business and where are they located? And finally, where are these things managed? Who is responsible and accountable for their delivery? Is this active management or just a rubber stamp? These findings can then be compared to the tax and transfer pricing policy to test alignment of substance with form. Following the OECD's guidance, tax authorities will start by considering the legal structure, like this. Then, they will review this in the context of the key value drivers for the business and the personnel responsible for the management and delivery of them. If there is a mismatch between the two, they will assess the economic substance of each part of the structure. This will be used to determine the appropriate tax and transfer pricing treatment of the group's finances as a whole. They can override the legal structure and arrangements between group companies where this does not match substance.
This could affect the tax residence of a company, benefits claimed under a tax treaty, whether a permanent establishment has been created, and income and taxable profit in a territory under transfer pricing principles.
For intellectual property, you can no longer just consider where the legal title is owned, but need to consider where it is controlled and where these functions are being performed. Functions in relation to IP include development, enhancement, maintenance, protection, and exploitation. Each step may not be carried out in the same place, so you need to think about the relative value of each function, who manages the functions and where are they based, how this ties in with legal ownership, which entity has been getting the value from this hard work, and do these facts align with the taxable profit resulting under the tax and transfer pricing policies.
If businesses have undergone a BEPS impact review and may have already identified that economic substance raises potential problems, or substance issues may have already been on their radar. Building on our extensive experience of value chain planning, we have developed our innovative ESTaR methodology for understanding risks around substance to establish what steps businesses can take to mitigate that risk. We use a framework which enables us to gain a clear understanding of the value chain and business model, using a methodology based around templates to keep discussions accessible and focused. We require only some initial information in advance, and we will gather the rest at a workshop with key people from the business.
The ESTaR offering is tailored to suit your business operations. Examples of the areas this study could consider are management functions and support services, research and development, procurement, manufacturing, stock logistics, after-sales, and technical and trademark IP.
Our international tax and transfer pricing specialists will provide businesses with an analysis of the risks together with our recommendations. We will also involve experts from relevant local firms across the BDO International Network where needed. Businesses will receive a report that compares their current business model against their tax and transfer pricing policies, including an assessment of where the economic substance does not match the current tax structure. We will also propose ways for businesses to improve risk areas to help make their transfer pricing model more robust and defensible in case of tax inquiries. The analysis that using our ESTaR model provides will enable businesses to have clear conversations with stakeholders about economic substance risks, have certainty over where tax and transfer pricing risk may lie in business models, and keep a focus on budgets. We can use the analysis to help businesses put effective remedies in place to reduce the risk of surprises in the future. Much of the legislation that will result from BEPS will give tax authorities the ability to challenge businesses on economic substance. We believe that economic substance issues will be a key driver for changes in international businesses in the coming decade, so the sooner groups understand the risks, the better. At BDO, we can help groups through each step of the BEPS landscape and ensure they're ready for BEPS.